Welcome to episode 75 of Accessible Finance. Let's dive in.
All right. So, Eric, we actually got a listener question. It is very, very broad. So there's a lot to talk about here.
Okay.
So I'm newly widowed and feel so overwhelmed with financial decisions.
Ouch.
Where should I start? So today's topic is one that is incredibly emotional, but incredibly important. It's such a difficult situation. Losing a spouse is already so devastating. And now there's all these financial decisions,
Right.
all of this information that's kind of happened. And oftentimes you don't have very much guidance, or you might, on the flip side, depending upon how large your estate is, find yourself with far too much guidance.
Yeah.
So where should someone in that position even begin?
So first, let's acknowledge that this situation is impossibly difficult. It's going to be terrible. The last thing you're going to want to care about is saving on taxes right now. But,
true.
Decisions have to be made. You have to kind of find a way and try to push forward one step at a time. So it's brutal.
I think that's a hugely important reminder, though, is that it doesn't all have to happen immediately.
Correct.
Chunking things, breaking things down into steps is so very important. So for someone who's just lost their spouse, like, what would you say step one should really be?
Pause. Pause big
Ooh,
decisions. Don't feel like you need to do anything immediately, right? Like, just take inventory, whether that's a couple days, a couple weeks. Figure out, where you are, where you want to be, what you have. Like, essentially account for all of your things. Oops. Playing with a pen. Sorry, that's just how it is. But yeah, get organized. Secure your income sources, right? So if you have life insurance policies, you're going to need to file or on the decedent, file paperwork for that. Make sure the beneficiary transfers start to, happen as soon as you've obtained death certificates. Always get a ton of those, especially if you have a large estate. You're always going to need more than you think you will.
Way more.
So make sure you have a ton of copies of the death certificate and start interacting with the institutions that you're aware of for accounts. So like compile statements is what we mean when we say get organized.
Yeah.
Compile statements, compile insurance policies,
Yep.
everything you can get your hands on. Try to make sure that you've got a complete idea of what the estate entails and all the current assets, all the current accounts.
That's a really, really good point. And I do think that, we've seen kind of predatory behavior happen from bad actors on people who are in emotionally vulnerable states. So
it's unfortunate because the scammers and, phishing attempts are typically targeted at elderly individuals.
Yep.
And then they're the most likely to be in this spot where you've lost your spouse. And then
Right.
another thing that does tend to be, the reality of our culture that we live in, typically the males are going to go first. And typically, for better or worse, this isn't always true, but a lot of the time, it's frequently true, at least for, the generation that will be passing now. The males are typically the ones that handle the finances.
Correct. I will say, in the majority of cases that we have worked with either directly or tangentially, it has been the female that has been the widow. And there are varying levels that we've seen of, comfort and competency with where their finances were.
Mm-hmm.
But also sometimes everything, but you don't necessarily know where all the passwords are kept and all of that. There's so many details that you don't think about.
Right.
Even like I reflect a lot, with everything we've been going through. I think it's hard for us not to reflect often on, what life would be like if I was to pass away, early or vice versa. And so I do think about that. And despite being...
I don't think about that. That's terrible.
Yes, you do. Right. But despite being what I would say, like, fairly well-versed in, the financial landscape, generally speaking, and then also our personal financials, there's still so much uncertainty and like dread that comes with, oh my gosh, like if I needed to get into this account, I don't know if I would be able to, like, I would need your phone for the 2-factor authenticator. Like, there's so many little steps that are there that are intended to protect you. But that really make it incredibly difficult.
Yeah, they can become hurdles.
Yes, to access things. And then you have to reset passwords, and then you're resetting them at a time where you don't know what you reset to what, and you have to reset them again. it can be so overwhelming. So give yourself permission and grace to
Yeah.
just take care of your emotional state first.
Mhm.
So that's a really, really good point. And there's no need to rush. There should be no major financial situation or move that needs to happen right away.
Mhm.
And so you may have somebody coming and trying to pressure you into selling your house or invest with their firm or whatever the case might be. You don't have to.
Yeah. So once you've addressed the immediate needs, you can start thinking about the bigger financial picture because it is important. There are a significant amount of decisions that can be made,
Mhm.
particularly when you've lost your spouse, because you're about to go from married filing jointly to single, which means your tax consequence, your tax liability is going to increase substantially
Significantly.
because the brackets are going to be cut in half.
Yeah.
So it's not something you want to think about. It's not something you want to do, but you really want to make a lot of the moves quickly. Also, you will receive a step up in basis upon the death of the spouse, particularly if you're in Louisiana, it's a community property state. What that means is if I have stock that, maybe we bought stock together and it's in a brokerage account, it's in a taxable account, and I bought it for $10, but now it's worth $100. Okay. Maybe I don't love the position, but I wasn't super excited about paying $90 of capital gains per share.
Yeah.
So it's a great time to rebalance with impunity. You're not going to have that tax liability because what happens is if there's a death of a spouse, you get a full step up in basis. Now my $10 basis in this $100 market value share goes up to the market value on the date of my spouse's death. So it's going to go up to 100, and then I could, shift positions if I wanted to.
Yeah.
Right. So unfortunately, it's again, terrible time, probably the worst time of your life. And there are a lot of planning opportunities that exist that would bring me to my next point, which is, I guess you could call it a shameless plug. Meet with a trusted financial professional. Look, I'll say a couple things, right? Because I've said on this podcast before, I don't trust a lot of financial professionals. I would bring people that you trust
Yes.
to the meeting. Don't go
1000%.
alone, especially not in a vulnerable state when you're, and even more, especially if you're not used to handling financial things. If you think they're going to talk over your head and you're just going to have to, wheel and deal with the first charlatan that you interact with. No, don't do that.
That's
So
great. That's
bring
really good
people
advice.
that you care about and you believe care about you and have your best interests at heart. Bring them to the meeting.
Yeah.
Because if a financial professional can't speak to you honestly and in front of third parties, then they're not your guy or gal.
Yes. And they should be very welcoming of that as well.
Agreed. No, I would ask people to do it.
We have asked people to do that. And I think that somebody who truly has your best interests at heart, right? It's not to say that a financial planner who's working with you is not getting something beneficial out of it,
Sure.
right? They certainly should be. But, we're certainly in the business and we tell our clients, we want to work with people who want to work with us.
Right.
And it's a very, very positive relationship that we like to maintain with our clients. If something devastating was to happen in any of their lives, we would welcome and encourage them to come and see us, if for nothing else, just to talk through everything that's kind of going through their heads.
Right.
And we absolutely would recommend that they bring anybody else. And in all honesty, when you're going through something, speaking quite candidly, when you're going through something that is hard, that is devastating, it's nearly impossible to remember what happened in that conversation when you leave.
Right.
So having somebody else there to help guide the conversation if needed, to help ask the questions that you've talked about with them that you're going to forget to ask, and then to help remember and recount the answers when you have left and you realize that you're kind of a weird bystander of your life right now.
Right.
There will be times where you feel like you're just kind of watching everything happen. Absolutely bring somebody trusted. That is excellent.
And then you or your friend that's coming with you can listen to episode 71 where we talk about which questions you might want to ask.
Excellent. That's true. Very legitimate shameless plug though here.
Yeah.
That episode was huge and
was well
so
received.
important. Well, and it's one that, we ourselves have experienced, right? We have seen and worked with financial planners, who aren't actually financial planners. They don't plan anything, but there are so many things that can go wrong, that it is really, really important that you feel very empowered to control the things so that things can go right. So yes, episode 71 does have some really, really great questions as you're going in.
So a couple of things as you get your bearings, right? We said meet with a trusted meet with a financial professional with someone you trust,
Yes.
preferably. Okay. You're gonna have a new tax situation,
Mhm.
right? Like when you have these unfortunate spouse unfortunately passes away, you're in a spot where next year things are gonna change. So
Small time window.
let's articulate real quickly what we're talking about. The married filing jointly bracket that you're currently enjoying, you won't anymore, right? You're going to be catapulted to single that year.
Mhm.
But however, for the remainder of the year that your spouse dies, if my spouse dies January 1 in 2025, then for 2025, I'm married filing jointly.
Yeah.
Does that make sense? So we're good to go for that year, and therefore there are significant planning opportunities there. You
So
have a
many.
much larger tax bracket than you will in the future.
And you can't
Another-
retroactively take advantage of those either. So it's very important
Right.
that you have the mental wherewithal or have somebody in your corner that has the mental wherewithal
Correct.
to be
Yeah,
able
you don't
to
have to
affect
care.
those
I mean,
changes.
I would recommend you shouldn't actually be that focused on this kind of stuff right now. I mean, to be fair, we've already said you've taken a couple days, weeks, months, whatever it's going to take to try to, get your bearings again as much as you're going to be able to. I don't think I truly don't believe you'll be able to fully put yourself back together. I'm not going to. So I'm not going to say that you should do that. But the point is that, you might want to try to move, and when you start trying to move, these are the things you're going to want to think about.
And I do think to that end, especially with the shift in tax brackets, tax filing status, it's
Mhm.
incredibly important to know that, like Eric said, if your spouse dies January 1st, 2025, you have a bit more time.
Mhm.
My dad passed away October 20th.
Right.
So we were under a really, really tight window
Things that happen
to help my mom. And we made things happen. But because we're in the business of having the mental wherewithal to be able to do said things,
Mhm.
I was not my best mental self. My mom was not her best mental self. My husband, fortunately, was. And this, again, is why it is so important to have somebody who's able to kind of help steer or guide that ship. Because if you're talking somebody passing away in November,
Mhm.
right, that time window is
It's
super duper
narrow.
short.
Yeah, it's narrow, right? If it happens in December, it's even worse.
Okay, so meeting with a trusted financial professional.
Yeah,
with
tax
someone you
situation.
trust,
So another
tax
thing.
situation.
So we're changing tax filing status.
Yes.
Right. We're also going to be inheriting their RMDs. So if they've already begun taking RMDs,
Really
then
good point.
they have to continue to take RMDs from that account. You're going to want to, if the surviving spouse is younger, typically what you'll want to do is convert the decedent's accounts, their tax deferred accounts, or those are the ones you have to take the RMDs from, right? So like traditional IRA, rollover IRA, 401k, that kind of thing.
Yeah.
You're going to convert those to your name so that the RMDs are lower, but note that the RMDs are going to be bigger, right? Like typically bigger than they were, because now you're going to take an RMD based on both of your accounts, or rather, I guess I shouldn't say the RMDs don't necessarily have to be bigger. They typically would be smaller immediately because they're going to a younger surviving spouse. However, the tax consequences of those RMDs are larger simply because of the filing status change. So
Correct.
a larger percentage of your taxable income now is going to be composed of your RMD. Does that make any sense?
Yes.
I probably said that in the most convoluted way I could.
You did.
I didn't mean to, so I apologize.
You did.
But the point is, you're going to want to change the owners and the titling of the tax deferred accounts.
Yes. And that kind of touches on what you were saying earlier about, breathe. You're going to be inundated with paperwork and stuff. Gather it in one single location so that when you are ready to tackle everything that needs to be tackled, whatever professional you're working with or whatever trusted advisor you are working with has everything in one place to be able to start helping you with those title changes and things like that.
Yeah, another thing you're going to want to do, beneficiary designations. So typically, like my individual account beneficiary designations are Rachel. If Rachel passes, I need to update them to our children. Right? So you would have to go in and make those changes so that, you're not going to, so that those assets that you're trying to have beneficiary designations on, so they don't pass through probate, are now no longer going to, so now they will continue to not pass through probate and be distributed more quickly and, seamlessly.
Now, some accounts do have the ability to put a primary beneficiary and then have secondary beneficiaries. So that can help kind of bridge that gap. But again, best practice would be to go in and still update.
You typically want to review beneficiaries like once a year.
Yeah.
And then you're going to want to look at your budget and cash flow. Think about what the impacts are there.
Yeah.
Are you provided for, considering you're probably going to have your social security benefits probably going to be reduced.
Yeah.
It's usually not cut straight in half because you're taking the larger of the two, right? But you're
But
going to
you're
have
not
the
getting
larger of
both.
the two benefits, but you're not going to have both.
Right.
So if I'm 2,500 and Rachel's 1,500, and then Rachel passes or I pass, now I've only got
We're
2,500.
still losing 15.
Yeah, exactly. You're still losing the smaller of the two benefits.
Correct. But it's also important as well to look at your budget and how that may affect expenses that you have. Typically, we will see that you're still going to have the same kind of general household expenses and things
Yeah.
like that.
It's not
So,
going to be cut in half.
and that I think is a mistake that some people make, right? Is that they assume that while their income's cut in half, their expenses are. And the reality is that, unfortunately, people who are single filers for taxes tend to have pretty similar expenses to those married filing jointly people without the benefit of
A
two
little
incomes. And
a little non-exactly financial tidbit to add here is social spending is proven, or in studies, right, in psychology studies and in finance studies, to have the most positive impact. So typically, like social spending, like going out to meals with your friends, and going on vacations, like with your friends and family, those have the most positive impact on happiness in retirement, rather than buying like things, big cars, big houses, and things like that. Social isolation, conversely, is incredibly bad and has one of the most profoundly detrimental impacts on your mental health and cognitive decline and all those things in retirement. I say that because at this point in time, when you're, trying to pick the pieces of yourself up off the floor, you're in this rough spot. Lean on friends, lean on family, and be willing to adjust your budget, adjust your spending so that you are leaning, more on the social aspect of it. Don't just hole up, and things could deteriorate pretty quickly at that point.
that's a really, really, really good point. And I think it's going to be hard to do until it's less hard to do. I think that's a shockingly good point coming from you. So, not that you don't make good points, but the socialization aspect is not necessarily your strong suit. You're growing.
Well, we try.
So, Eric, I think that's excellent. And I think, this is such a tricky episode because there's so much minutia that we could really dive into. But at the same time, it's really important that you don't feel like you have to dive into the minutia immediately. So it's a really weird balancing act. And hopefully you have people in your life, whether they are professional or personal, that can kind of help you have a nice balance of those two.
Right.
So I think, you've been talking about how even in the hardest moments, there should be a way forward. So what, for someone newly widowed, overwhelmed, trying to navigate all of this stuff,
Yep.
like what are your key takeaways here?
Yeah. So start slow, get organized, no big decisions. Okay. That's, I guess, the first component. Organized, slow,
Yeah.
no huge decisions. Take a deep breath. Secure your income streams and anything that might be time sensitive.
Mhm.
So locate policies like
Mhm.
insurance policies, life insurance policies, things like that might pay out. Communicate with the funeral home and get a bunch of copies of the death certificate. Do those kinds of things. Start sending that out,
Mhm.
and then really, this is one of the more complicated financial times in your life. You probably should consult a professional. Again, we would advise you do it with somebody that you trust. So.
Love that.
Those are my takeaways. That's what I
Excellent
got.
advice, Eric. So, listeners, if you or someone you know is going through this, we hope today's episode helped provide some clarity and some reassurance. If you have any questions or personal stories you'd like to share, please do not hesitate to reach out to us at podcast@equilibriumfp.com.
Thanks, guys.
Till next time.